When you're listening to the news, all we're hearing is what's going on with the mortgage rates, what's going on in the housing market, closing costs, all these kinds of questions we're hearing about. That's all we hear is the negativity associated with home buying or home selling. If this is interesting to you and you want to find out the truth about these issues, we're going to speak to a lender today and we're going to get to the facts. We're going to find out, what does all this mean if we're looking to buy a house or sell a house here in Central Kentucky? Hi, my name is Lisa Prather with Century 21 Simpson and Associates. If you're new to our channel, please hit the like and subscribe, tap the bell for notifications so you'll be the first to know about all the market changes here in the Central Kentucky area. We're going to get to our lender today and we're going to get to the facts of the matter. So stick around, we're going to get to it right now. Whether you're looking to buy next month or 9 months from now, feel free to give us a call, send us a text or an email. We'd be happy to help you make the smooth move into Lexington or anywhere in the Central Kentucky area. So this afternoon, we are going to be talking to a lender, Rebecca Elliott from Republic Bank, and she's all things loans. So if there's anything you want to know about mortgage loans, closing costs, pre-approvals, these are the things we're going to ask her some questions today, and she's got all the answers. So here we go. Okay, you want to tell us a little bit about how long you've been a lender?
Sure. So I want to start by giving my NMLS number. It's 3379. I do have to disclose that. And I have been doing mortgages for 27 years. So I survived the housing market crisis of 08.
You're still here.
Still here. Still kicking.
That's always good.
Yeah. Yeah. What kind of questions do you have for me today?
So today we get a lot of questions from clients, buyers about, what do I need to get a pre-approval? So just a simple, basic question.
That's a great question. So pre-approvals, typically you just have to do a loan application, and most lenders have those online, or you can do them over the phone. I prefer over the phone because I can kind of dive into the questions and get a little more detailed that way, but you can definitely do it online. If you're self-employed, you're going to need to have your tax returns just so the income can be figured. But if you're a straight W-2, typically just doing the loan applications enough to get yourself pre-approved.
Okay, perfect. Awesome. Another question that I hear all the time is, how are the rates going to affect my payments?
Yeah,
well, that's all we hear are the rates. You turn on the news or you turn on Facebook, anywhere you go, it's all about the rates.
Right. Well, rates are inching down, which is good, and that's kind of normal during an election year. Rates tend to get a little bit lower around election time. We did have a lot of rate movement over the last 18 months. Rates have gone, from being in the mid-sixes to almost 8.5%. Now they've come down significantly since then. And I'm glad you actually asked about the interest rate and how it affects payments, because I have a lot of clients say that, I want to wait till rates go down. Right. And the thing about waiting is once rates go down, you and everybody else that's had that thought are going to start looking for houses. So there's going to be more competition. It's going to make it difficult. And because of lack of inventory, we're going to see prices going up pretty steady on homes. So, 10% appreciation on a house is pretty conservative right now, I think. So if you were to look at a house this year, for example, that's $400,000, say the rate's around 7% and you're doing 20% down, that's $80,000 you'd need to have down. You'd borrow $320,000. And your principal and interest is going to be somewhere around $21-28 a month. That's just principal and interest, not taxes and insurance. And let's say you just decide to wait another whole year and then go try to buy that house and rates are 6%. Well, at 10% appreciation, that $400,000 home is turned into a $440,000 home. So you're going to need $8,000 more to put down, and the payment is going to only go down to $2,110. So you're talking $18 less per month because you're borrowing $352,000 now versus $320,000. If you want to look at the life of the loan, if you were to keep these mortgages for 30 years, which is pretty rare, you're still going to come out upside down because you waited, you had to have more down payment. If you were renting, you've also paid rent at 100% for a whole year while you waited on these rates to go down to 6%. So my philosophy is marry the house, date the rate.
I love that. That's awesome.
Yes.
Yeah,
you can always
have to post that. That's
right. You can always
refinance.
refinance. So if you're comfortable with the payment, don't get so hung up on the interest rate, you can always refinance.
And we hear so much right now, I'm going to wait, I'm going to wait, I'm going to, maybe I should just rent. But so many people, they can't come up with that 20% down.
Correct.
So is that a set in stone? What options do people have if they don't have the 20%?
I'm glad you asked that. So you can buy a home with as little as 3% down, and there's even some programs that do what's called down payment assistance. So they'll help you with having that 3% down as well. So sometimes you can get into a home with basically some closing costs out of pocket. You do not have to have 20% down.
Okay, that is really good to know. We have so many people trying to get into the housing market, and when you think you have to have $80,000, how long will it take to get $80,000? So a lot of people ask that. So that's really good information. One other question I wanted to talk about is, what are some of the other things that you might need besides the down payment, like the closing costs?
Yeah, that's a great question too. So when you buy a home, you do have closing costs. You've got appraisal fees, title fees, recording fees, and then if you're escrowing for taxes and insurance, making that part of your monthly payment, and that is required if you don't do 20% down, by the way. So you have those fees to pay, your closing costs, your prepaid items, and things like that. You do have to pay those yourself. The seller can also help with that. You can get a gift from family for closing costs, but most of the time closing costs cannot be financed into the loan. So you will have to have those out of pocket.
Is there like a percentage that people can say, oh, I know it's going to be 2% or it's going to be 5%, or is there kind of a good rule of thumb?
Typically closing costs and prepaids run about 2 to 3% of your purchase price. That's a kind of a good rule of thumb to know.
Well, that gives us a lot of information. Definitely looking at a $400,000 house right now, and it is still considered, oddly, a seller's market. But buyers still do have some power because of rates being as high as they are. They're not really. We're not really seeing multiple offers on a lot of properties right now, but maybe once rates drop, we are expecting that could be a possibility. And so once we get into that multiple offer, not only will we be looking at the amount that the house has appreciated in the past year, but you may have to pay more than asking just to get the house. So that's something I try to talk with, buyers about, that this may be, something coming back. We had that just a few years ago, and it was really hard on buyers. You never got a house for asking price.
Right, you didn't, and you normally had to take care of any appraisal shortages. You couldn't ask for home inspection repairs. And if you had another home to sell, it was pretty rare to be able to get an offer accepted contingent on your house selling. So that is the good news with rates being a little higher than what we like. Is I'm seeing contracts coming over with contingencies to sell your current home. I'm seeing seller helping with closing costs. So you do have some wiggle room right now.
Yeah, well, that's good information for people to have. I think sometimes they think, oh, I can't even ask for the seller to help with my closing costs. So you are seeing more of that than what you saw, a couple of years ago?
Over the last 18 months, I've definitely seen contracts be a little more giving than they were a few years ago.
Well, that's good to know. Well, hopefully this will help you if you are considering meeting with a lender, considering getting into a mortgage, to figure out what prices you're going to have to pay. What are the things coming up that you're going to have to cover on your own? And should you wait? Well, it sounds like maybe you shouldn't. So if you have any other questions, or if there's things that you would like us to talk with Rebecca about, put it in the chat, put them in the comments. I'd be happy to send them over to her, and we can get that out to you, as soon as you get them in there. So we just thank you so much for your time today. And guys, if there's anything else that you can think of that you'd like to talk about when we're looking about these $400,000 houses, be sure to send us a text or an email. We'd be happy to help you make the move into Central Kentucky, whether it's Lexington, Frankfort, Georgetown, or anywhere in between. And until then, we hope to see you around town.